Hello everyone and welcome back to Crypto Atlas. Unless you guys are new to the channel, then it is very nice to meet you. So today we're going to be talking about Bitcoin, Orchid, Ethereum, taking a look at Algorand as well as what's going on over there. I'm going to be changing things up a little bit though. I'm actually going to be trying to talk a little bit less about stuff that's going on in the news and giving you a little bit more of an in-depth analysis into the technical analysis on these charts and hopefully condense it down a little bit better and give you some better price ranges and further in-depth analysis on this, right? So hopefully you guys enjoy that. If you are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. Let's try to get to 100 likes on this video if possible. I'm gonna be trying to push for that for every video, and every like is greatly appreciated. And if you can, make sure you click the bell icon as well so that you get notified whenever there is a new video. Sorry if you hear any dinging noises in the background. That would be my roommate not answering his phone. And yeah, let's go ahead and get into the first little bit with this. So first thing I want to actually talk about is going on with my other channel. So if you guys like animations, I do have another channel in which I do animations, and my first video is officially up. I took a 3-year hiatus. It's just a quick little side thing, but it's called Atlas Animates. The link is in the description. First one is about Pokemon. Hopefully you enjoy that. Okay, Bitcoin hits all-time high against gold as a haven battle rages, right? So as Bitcoin zipped past $29,000 on Friday, the digital currency reached a high of 15.40 gold ounces, surpassing the previous peak from December 2017, according to Market Watch data. Gold also posted impressive gains for the year, though they paled in comparison to Bitcoin's meteoric rise. The yellow metal spot price ended the year on a 25% gain. Bitcoin's biggest proponents believe that the digital currency is eating away at gold's market cap as investors opt for the efficiency, portability, and proven scarcity of the asset. Astonishingly, that view is also shared by JP Morgan Chase analysts, who believe Bitcoin's digital gold narrative is drawing capital away from precious metals. Some believe that Bitcoin's supply squeeze could send prices higher over the course of 2021. As Cointelegraph recently reported, digital asset manager Grayscale bought up nearly 3 times the Bitcoin mined in December. Demand from PayPal, Cash App, and others has also contributed to an apparent supply shortage of Bitcoin. Now, I do want to add a little note on this. The thing is with PayPal, with what we saw with their announcement to where you could buy Bitcoin, please keep in mind that that's actually pertaining to just the United States. It's actually early in the first half of 2021 that PayPal is going to be rolling out their services to allow worldwide purchases of Bitcoin. So the amount of consumers that are buying Bitcoin as of the moment and this price surge is taking place in relationship with that, right? It's not as strong of a reflection as what we're going to be seeing here in the near future as Bitcoin is now able to be purchased more worldwide, more easily through things like PayPal. And another thing to take note too is that you could have other really big players step forward that's going to be just absolutely game changing and propel this even higher. Imagine if Amazon steps forward and says that you can buy Bitcoin with it, or Walmart, or eBay, right? If eBay is looking to try and get the heads up against their main competitor with Amazon, allowing the ability to purchase things with Bitcoin could put them in a strong position. Or if they decide to allocate some of their funds into something like Bitcoin, that also could put them into that position. So you got to keep in mind that when you're looking at investments, this is the fastest horse that's going on, especially when you do the comparative analysis to things like gold. So for a lot of these different companies now, the big players, the big financial institutions and all these major companies, right? They're looking to put their money into Bitcoin to allow it to accrue a higher interest rate in comparison to some of the other assets that are out there. And that's actually giving them a big leg up inside the market space. Okay, so next thing up is FinCEN. Is to impose new regulations for crypto holdings at foreign exchanges. This is actually separate from the one that they're proposing previously, which was the focus on the cryptocurrency wallets. Currently, the report of foreign bank and financial accounts (FBAR) regulations do not define a foreign account holding virtual currency as a type of reportable account, right? Accidentally failing to file an FBAR can result in a civil penalty of $10,000 for each violation. So that's the part that really sucks. You kind of slip up a little bit, each violation, 10 grand, 10 grand, 10 grand. That can add up to a lot, especially depending on the person. Lawyer Jake Chervinsky described that this proposal seems targeted at users of non-US exchanges, and he believes that it shouldn't apply to assets in self-custody. He suggested that the reason for the proposal might be either tax evasion or bringing non-US crypto companies into compliance with the Bank Secrecy Act. All right. Now, also, Wall Street is reviving the dream of a Bitcoin ETF with new SEC filing. Van Eck Associates Corp has started a new push to launch an ETF tracking the world's largest digital currency, according to a filing Wednesday to the U.S. Securities and Exchange Commission. The Van Eck Bitcoin Trust would reflect the performance of the MVIS Crypto Compare Bitcoin benchmark rate. All indications from the SEC are that a Bitcoin ETF still faces an uphill battle, said Nate Grassi, president of the ETF Store, an investment advisory firm. That Van Eck has the confidence to file for a Bitcoin ETF might indicate some shifting viewpoints within the SEC. Clearly, a key to watch as this drama continues unfolding is who President Biden taps as SEC chair. By filing now, it will restart the clock for a review when there will be new SEC membership and leadership, said Todd Rosenbluth, director of ETF research for CFRA Research. However, I think the SEC has made it clear they have concerns that need to be overcome. According to the filing, Van Eck's ETF plan to hold Bitcoin and will value its shares based on prices contributed by exchanges that MV Index Solutions GmbH believes represent the top 5 exchanges for the cryptocurrency. Such an ETF could be taken as bullish for Bitcoin because it does broaden the universe of investors who could be aware of Bitcoin, said Everett Millman, finance expert with Gainesville Coins. What do you guys think? Do you guys think that an ETF is right around the corner? And let's be honest, guys, if an ETF does come out, right, it says the broaden the universe of investors who could be aware of Bitcoin. One of them is Kevin O'Leary. He's actually stated that he's considering putting 5% of his portfolio if there is an SEC-approved Bitcoin ETF. So if we're ready to go with this, I think 2021 could be the year, especially when we see the amount of other major institutions that have come into play for Bitcoin. So it's not as speculative. It's a lot more major companies that are saying, hey, we looked at it, we analyzed it, we believe in it. We're putting very large amounts of funds of ours as an American-based company especially into something like this. And so you want to secure and protect your economy in the United States, so why not emphasize more things that strengthen around that kind of concept? So you guys let me know what you think about that. Okay, now we're going to go ahead and get into the charts here. So let's start off with Bitcoin. And whoops, I did not mean to do that. So first thing that we got is an ascending wedge pattern formation. And this is typically signs of like a bearish reversal, so do keep that in mind, guys. We are also on the new candle formation. As of the time of me recording this video, it is a little bit past 4 o'clock. It is 4:06 p.m. Pacific Standard Time. So this red position is just on the new candle for the day, right? So if we take this actual point, which occurred way back here, I wanted to strengthen the idea a little bit more than just having basically 2 points of reference. So instead of dropping this, say back over here and its actual formation, I just pulled it across so we can tap into this point as well, just to strengthen it just slightly more, right? So if you actually take that candle from back in this position, as that was actually ironically the lowest point, we didn't have any further drops that occurred through here, we could see a potential drop, I would say, on this breakout zone right down to around 26,453 if it decides that it wants to pull back. Although we are seeing a strong rally, and with where we are right now, it's called the price discovery zone, right? So there's nothing to really compare to in the past because we've never been this high with Bitcoin before. Plus, you have more adoption, we have the limited supply, and there's a lot of factors that kind of differentiates Bitcoin from things like gold or the S&P 500. So you can't say a direct analysis relationship between these two things, right? So if this decides it actually wants to break up in this position, then we could see it pushing up as high around $32,500 before it potentially has a pullback. This is my own opinion. Keep in mind, guys, I'm not a financial advisor. I'm sharing with you guys the news and giving you my own perspective view on all this stuff. So hopefully you do enjoy it. And once again, if you are new to the channel and you're enjoying this, feel free to hit subscribe. I do want to thank you guys so much for helping us hit what are we at right now? 1,900 subscribers, I believe. So we're almost to 2K, and every single one of you guys that have shown your support, I mean, it means so much to me. And then also, if you guys can hit that like button, let's try to go to 100 likes, and also click the bell button. And so right now we are seeing some resistance being formed right around, and why did that not move? I just moved the Fibonacci retracement. That's not what I meant to do. Okay, well, I'll get that fixed there in just a second. So let's move this line right on down here. So that is going to be a level of resistance from the previous day on the high, right under $29,700, right? So if we can break above $29,700, then the next major zone I would actually be looking at would be on the Fibonacci retracement here, which that is not that. Let's go ahead and get rid of that there. Where did my point? I got too many points all coinciding with things here. All right. Do apologize about that, guys, actually. Well, you know, I'm just going to go ahead and delete this for now. Let's get rid of that. I try to be as prepared as possible, but sometimes you get little hiccups and things like this, especially if you got a whole bunch of stuff that's converging all in the same exact point, right? So, you know, it is what it is with that. I'll mention some other things, and then we'll actually take a look at that once again. So first off, we're still above the 21 EMA, which is this yellow line, and that's a key metric for showing whether you're in a bullish pattern or bearish pattern. And we've been staying above the 21 EMA realistically since December 12th. But if you factor out just the 1 day of closure that dropped below, basically a fake out, and then it decided to have a further continuation on, we've realistically been seeing this rally take place ever since back on October 8th, right? So with that major push up from October 8th, we've accrued 178 or 179% of an increase, quite a substantial price increase when you think about it, right? And then we're also talking about an almost $19,000 price increase on top of that. So an absolutely phenomenal run for sure. You can also see here, let me go ahead and get rid of this one now, just to clean up the charts a little bit as we work our way through. This right here is called the Bollinger Band, and one of the things is to take into account, this is kind of like a sausage link. So when it gets really thin, at some point it's going to broaden out the end of the sausage, and that broadening position is signifying that there's now a further rally position in that direction, right? So an increase essentially in volume and price relationship. So you guys can actually see here that we have had, since what looks like December 15th, quite a significant broadening on that Bollinger Band. It is still quite wide. So when the price starts to shift down and slow down and start to go into a consolidated space, we'll actually see that begin to close itself up more. So we're still rallying up as it has been here. And I mean, at some point it's going to start to slow down, right? But again, we're in price discovery zone. So it's just interesting to see just how substantially wide this Bollinger Band still technically is. You can also see that overall down here, the level of volume has progressively moved down just slightly since back on December 17th. And so we'll get a moment where the volume is going to surge back up once again. You can actually see a variety of days that are all basically the same level of volume. I mean, it's very, very close. You got one on October 21st, which was bullish and green. You got one on November 5th, very bullish. You got another one on November 18th, which kind of ended up neutral in its position there. Another one on December 16th, which was very, very bullish. And then a red candle position, which took place on December 27th, which was just slightly bearish, just slightly, right? There was a lot of price action that shot up and they ended just slightly in the red. So very interesting when we're seeing these large volume candle positions. They're most of the time they're very bullish and the price is going up. And again, there's only so much supply, right? So if demand continues to increase and everyone is moving their currency off of the exchanges, then there's crumbs that are left, right? Some people move their currency back onto the exchanges and they'll sell it. Miners have to still make a profit, but then you got the major players like PayPal and Grayscale and Square and some of these other companies that are coming forward, MicroStrategy. They're all buying these coins essentially over the counter. So all the miners, that newly minted Bitcoin and those blocks, they're gone. All you have to work with is the old Bitcoin. And they're also tapping into the old Bitcoin, right? They're not just getting all the new stuff. So when more and more players come in, like NFL players, for example, what's going to happen? Right? More and more people. So, and on top of it too, some people are going to be taken off the exchanges. They're going to make an oof and they're going to lose it. They're going to make a mistake or something, right? And they might not even say it publicly, but it's going to be happening. And for some of these people, it might be a lot of Bitcoin. And if they make a big oof, guess what? It's gone. Like, that's like losing your wallet inside the ocean. Good luck trying to be able to find that again. All right, so now let's go ahead and go back to our Fibonacci retracement position here. So essentially working off of that crossover on the 21 EMA. All right, that looks a little bit more clean for us. Looking pretty good there, right? So we are still above the 0.236 on the Fibonacci retracement. And so you guys can actually see here that it would have to tap all the way down right on the 21 EMA. So it's a very interesting point of correlation right there. That's so right on the 0.236, that'd be at $25,179. I would be very concerned about that as a potential drop zone if it decides it wants to retrace considerably. More than likely, we'll see a bounce off take place right around in that position. You might see a little bit of an over an extension and then a pullback down, but more than likely, if it was to drop significantly, which that is quite significant, right? We're talking about $4,000 here. Then that would be down to $25,179. Further drop down would actually put it in the 0.382 Fibonacci retracement zone. That's around $22,000. You can see all this is still quite substantial. And what's actually really interesting too is the 0.5 rests right on the $20,000 mark. So it's very interesting how these key levels on the Fibonacci retracement identify themselves. Let's go and take a look at the next coin now. And looking at Ethereum, right? So Ethereum is showing a broadening wedge pattern, which is potentially going to be a bearish position. And I would be concerned about this. We could end up seeing a level of support right here around $490 if it decides it wants to break down below the level of support. The good news is that if you drew a median line right through this position, kind of like this, right? By doing so, you can see that we're in the upper quadrant, which actually strengthens the idea that it's easier to break above than it is to fully drop all the way down and then drop even further down. It would have to be a significant drop. And that is actually going to be more likely reflective of either some super negative news or regulations that takes place for Ethereum specifically, or something that goes on with Bitcoin and forces it to drop further down in that too, right? So more recently, if we were, something more closer that we would have as a, I'm slurring so many of my words right now. Give me 1 second, guys. All right, so the first level I'd be concerned with is $700. That actually fits on the 0.236 on the Fibonacci retracement, right? Another level drop is shown right across here, which would be at $674. That's very close, tying in with that 21 EMA. Just a little bit further down would actually be 666, which is pretty creepy when you think about it, right? Let's just say 665, right? We can drop down $1 extra right there, and it's probably just a little bit more accurate, 665. So there's that position. And then next would be 0.382 on the Fibonacci retracement. That's at $657. And then, I mean, if it went all the way down here, the actual level of support coincides pretty well right near the 0.61A in the Fibonacci. So that would actually be at the $593 range. So going sub $600 once again. We do need to try and break up though and get above this level of resistance. This on the daily is at $764. A further level continuation up above that would be $834. I am seeing some massive red occurring for Bitcoin on the side right now. So I'm just kind of keeping an eye on that as I'm discussing things in this video. And let's go ahead and look at the next one. Look very briefly at Orchid, and then we're going to finish up with Algorand. And again, I'm going to try and make these videos a little bit shorter for you guys. So looking at this, we have a symmetrical triangle pattern formation that's been showing. You can actually see on the Bollinger Band that it's been starting to squeeze a little bit here after this big broadening position. So if this decides it wants to have a big explosive movement, it is pretty similar in size as far as that depth goes of the Bollinger Band back around November 11th or so, and that was actually followed up by a nice run up. Unfortunately, it basically formed what's called a Burj Khalifa pattern, and it drops right back down, filling in, essentially looking like a building, right? And it tried to break above here, but it did go back into this position. It had one day that it dropped down below of closure, a little bit of a fake out, and then it's been just doing a lot of this sideways action, consolidated movement. So right now, major level of support is at 23 cents, 0.2295. Further drop down below I'd be looking at would be at 22 cents, essentially going down 1 cent at a time, right? Breaking below 20-cent range would be pretty interesting, but at this point, it's looking much more bullish as far as for where it can actually move from here on out, right? So if it goes up to the 21 EMA, that's up to 24 cents, 0.2439. Breaking above that is going to be at the 0.2485. And then above that is going to be trying to break out of this major consolidated zone and entering more accurately into the other zone, which is at 27 cents, 0.2753. This could continue to push forward all the way through to January 6th, or you could even argue and say January 7th if you just readjust this position. I'm just going to go ahead and readjust the position right there. It strengthens itself with a couple of these points anyways. So, potential sideways action, then it's going to make a decisive move either up or down. If you just want my personal opinion, I think this is starting to show signs of a potential run up, as we have seen it hang out quite a bit through the 25-cent range, and then there was a long period where we've even seen in the 30-cent range. And the project is still moving forward. They got new advances that they're going to be doing, more market space they're going to be expanding out into as well. So I'm looking forward to the future of the project. Excuse me. Now let's go ahead and look at Algorand. Finish it up with Algorand. All right, Algorand has a bit of a broadening wedge pattern being formed in this position, so do be cautious with that, guys. If this was to have a significant drop down in this point in time, I would say at most you would see it drop down to would be right around here. But I don't see this as being very plausible. That'd put around 16 cents. It's at 39 cents right now. The last time it was in the 16-cent range was all the way back on around April 16th of 2020, right? And it has been below that before too, but that would be quite a substantial drop. And also, just like I was saying with the other cryptocurrency, we're actually in the upper quadrant. So a further rally up, I would say, could potentially put you in the range. It's bothering me that this is sideways. Could potentially put you in the range of over 50 cents at 56.56, right? So I'd be looking right around here as a major top zone. Didn't mean to do that. Drop that down right there. And also you can see on the Fibonacci retracement here that we are in the upper quadrant zone at the 0.236. There was some major resistance that took place yesterday at 43 cents or 0.4363. It is showing slight signs of retracement back as of today. If it drops all the way down, it would have to go through the 0.236, which is at 38 cents, 0.3859. The next major zone on the Fibonacci retracement is at 0.382. That's at 35 cents, 0.3551. And then the 21 EMA is at 33 cents, 0.3380. And then you got the major level of support here, which is being formed at 29 cents, 0.2970. So these are the major positions that I would be concerned with, guys. If it can break above this level of resistance here around the 43-cent range, tapping into the psychological position of 50 cents is going to be very key. And then as we go higher past the 56-cent range, we have another major high that would need to be broken, which is going to be around the 76-cent range. So it's still got quite a ways to go, but you can see that as of the previous day, massive volume that took place. Do be cautious with this. When you see massive volume candles take place like this, it typically signifies that there's likely to be a major dump right afterwards, a pump and dump situation. It's something that's very common, especially when we see lower price point cryptocurrencies like this. And especially also lower volume. That's another key thing to talk about too. It's more easily manipulated. You can see we're already starting to see a bit of a pullback. We are only 22 minutes into the new candle for the day, but just an air of caution with that. So right now, as long as it stays above the halfway mark in this. It's still holding pretty strong, but the overall technical trends are suggesting that it is to go into reversal and start heading down. And you do see the massive level of volume that was purchased yesterday. So, just kind of be cautious with this, guys. It's more likely it's going to go down right now in the long term than to go up, but I would eye with where it is at currently. That's going to go ahead and do it for this video. So again, if you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. Let's try to get to 50 likes. If you want to check out my other channel, Atlas Animates, in that first animation that I've done for the new year, I've got other animations on there too, though. The link is in the description for that, and hopefully enjoy. And also click the bell icon here so you know whenever we have a new video. Thank you guys so much, and I will see you in the next episode.